Dear friends, welcome to weekly view on markets. Markets have consolidated during this week. There was huge up and down movement after US election results. Continuous FII selling is posing a big challenge for Indian markets. Big market fall is prevented by DII buying at lower levels. Euphoria generated by Trump's win in US has faded away by the end of the week. Markets likely to consolidate in coming week with negative bias. Technical charts also indicate weakness and further consolidation in the markets in the coming days. Below average Q2 earnings is one of the major factors which keeps pressure on the markets. Investors should have patience and they should wait till the corporate earnings recover, maybe by the end of December quarter. Now let us look at performance of indices during this week. Nifty has closed at lower levels. It fell by 156 points, that is 0.64% down, and closed at 24,148. Bank Nifty closed at 51,561 by losing 112 points, is loss of 0.22%. Midcap index also lost 145 points, closed at 56,352, is a loss of 0.25%. Small cap index closed at 18,445 by losing 1.86%, that is a loss of 349 points. India VIX has a little bit cooled off. It is at 14.47. Now we will look at performance of different sectors. Information technology gained about 4% during this week as Trump's victory in US is likely to see more spending on IT sector and reduction in corporate tax in US. And Trump's runs is a very industry friendly. So because of all these things, we have seen a good rally in IT sector. PSU banks, consumer durables, healthcare all consolidated with a gain of 1%. Realty sector lost about 4.11%. Media lost about 3.28%. Energies stocks lost about 3.11%. Commodities, oil and gas, FMCG, infrastructure, pharma, public sector stocks all lost between 1 to 2%. So there were more sector losing and only few sectors gaining during this week. Advance and decline ratio was in favor of declines, and we have seen a lot of selling in mid cap and small cap sector during this week. Now let us look at technical charts. This is the daily chart of Nifty. After giving a head and shoulder pattern, which is a bearish technical pattern. The impact of this pattern is still there on the markets, and Nifty is likely to consolidate at the present levels. And only when Nifty crosses this neckline, that is around, it has to cross 24,700. After that, my view on Nifty will be bullish. Till such time, the consolidation with the negative bias. This is the chart of Nifty mid-cap index. Mid-cap index also made a head and shoulder pattern. But since it has gone above the neckline, this is the neckline. It has gone above the neckline. I have a positive view on mid cap index. Mid cap index may pull up from the current level. This is a daily chart of Nifty small cap index. Small cap index also has negated this head and shoulder pattern, and last 2 days of the week it has given a correction. But in the coming week, I expect Nifty mid cap index either to consolidate or gain from here. This is a chart of Bank Nifty index. Like previous week, the Bank Nifty index is trading within this band of 51,000 and 52,500 on the upside. So if it breaks 51,000, we will see some more correction. And I will be bullish only when it conclusively crosses 52,500. Till such time, I expect Bank Nifty to trade within this band only. Now let us look at some of the fundamental factors of the market. RBI forex reserves for the week end is at 682.13 billion US dollars. It is down by 2.6 billion US dollars for the week. Still, it is a quite comfortable forex reserve position for RBI. Can take care of any untoward events in the economy. Foreign exchange rate is at 84.38. The rupee has weakened against the dollar. The dollar index from around 102 level, it has almost gone to 104.95, almost touching 105 levels. So there is a overall demand for dollars globally. That is the reason the rupee has weakened during this week. And RBI might have sold some dollars in the open market to stabilize the rupee. That is why we see the RBI reserves down by 2.6 billion US dollars during this week. Brent crude price is at 77.41 per barrel. If Brent crude price remains below $80, it is good for Indian economy. And after winning the elections, Trump has given an indication that he will not allow the oil prices to go to too much higher levels. So that has put a pressure on crude price, and it is remaining below $80 per barrel. Gold price, after almost hitting 80,000 rupees for 10 grams, has come down. It is at 77,292 rupees for 10 grams 24 carat. FIIs continue to sell, and this week they have sold 19,638 crores in equity. DIIs have bought 14,391 crore in equity during this week. Since DIIs are not exactly able to match FII selling, we have seen weakness in the markets. And this FIIs selling may continue for some more time. Quarterly results for second quarters are almost coming to an end. Week is going to be the last week for the quarterly results. So far, the results are weak. Revenue growth is in single digits at around 9%. This should have been in the range of 15 to 20%. Has dropped below 10%, which is a worry. Profit growth of the companies is also around 6%, which should have been in the range of 18 to 20 or 18 to 22%. This had dropped to nearly 6%. The weak corporate results are putting a pressure on Indian markets. The market valuations looks very high with the present kind of earnings. If the earnings growth have to support market, they should be in the range of 20 to 22% profit growth. So investors have to wait till the corporate earnings pick up. I expect because of festival season, the results of the companies for the December quarters should be good. Till such time, that is for another 2 to 3 months, we will have to wait. Charts also indicate the same weakness, and further consolidation in the market is expected as per the chart patterns. Good time for SIP investors to accumulate units at lower NOVs. Whenever market corrects, the NAV prices drop, and for the same amount of investment, mutual fund investors can accumulate more number of units, which in the long term will benefit them. Long term investors can start buying quality companies at lower levels, but I advise not to put all the money at a time. If market falls by 8 to 10%, invest 30% of your money. If it falls by another 5%, put another 30%. If it falls by 20%, then you can invest the remaining amount of money. So this gives a clear view on how to invest at various levels instead of just speculating in the market. India's macroeconomic parameters continues to be good, and exports are seeing uptick. The fiscal deficit is also under control, and RBI governor is confident that inflation would moderate and it should come down. So, with all these factors put together, there is a good opportunity for investors to stay invested and make good amount of returns in the coming years. But investors have to be patient for a while because there will be various factors due to which day-to-day volatility will be there. Investors should not worry about day-to-day volatility. They should look at the long-term prospects of our economy and long-term returns. And if they remain invested for a longer period of time, definitely they will make good returns. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.